and therefore you have low premiums, you have great availability, and here you have gold at all-time highs on the LBMA and on GLD going completely unnoticed. I believe 2024, there will be an inflection point where gold and silver become mainstream. I don't know what that is, but I have a very hard time believing there won't be a black swan event. I really, truly do.
Welcome, Economic Minds. Today's conversation with Andy Schectman from Miles Franklin unveils the economic dimensions of gold and silver. Despite recent market changes, let's uncover the economic frameworks of 2024, focusing on the strategic developments within the BRICS nations and their implications for precious metals. Get ready to dissect the intricate economic tapestry influencing these vital commodities. Don't go anywhere because Andy will share some important topics with you.
Yeah, look, I mean, I think that gold actually did pretty well in the face of an environment of rising real interest rates. Even, we can put the shadow stats argument out of the equation. We don't have to talk about real interest rates, being negative in face of a lying CPI metric. But in the face of, 11 or whatever it was straight rate increases up 500 basis points or whatever it was, gold held up, and there's a term in economics that speaks to the inverse relationship between real interest rates and gold. It's called Gibson's paradox. And this is why everyone thought gold would not do well in a rising interest rate environment, but lo and behold, it did. And I think that despite the rate hikes that were supposedly bearish for gold, it did very well. What happens now when the Fed has signaled capitulation to inflation? Not victory, in my opinion, but more along the lines of capitulation. They know they'll break the entire system if they continue to jack up rates. And what happens now, as rates are going to, at least short-term rates in the foreseeable future, if we believe the Fed, and take all market fundamentals out of the equation and the possibility of black swan that pushes rates up, let's just take it at face value. How good would gold do in a falling rate environment now? I would argue probably better than it did in a rising rate environment. But nonetheless, the volatility is something I think we can continue to expect. And the volatility, which is orchestrated to a degree, I believe, is always kept within a range, a tight range, typically within a tight range. I don't expect we'll see it fall much further, but it's kept in a tight range, and that volatility and that counterintuitive behavior, that counterintuitive action keeps the large swath of the investing public out of the market. And you look at what happened this morning. It was up as it left the Eastern physical markets in Asia. And the minute it closes out of Asia and hits the corrupt AM, PM fix on the London crap market and the COMEX, boom, it goes straight down. It's just more of the same until it changes. But I think as far as gold is concerned, I think 2000 appears to be the new support for gold. And, it used to be a massive resistance. It seems to be support now. That's very bullish. I find it interesting that if we take a look at the fact that, as you mentioned, gold hit all-time highs right at the end of the year on the LBMA at 2069.40. It hit an all-time high on GLD, and yet there's absolutely zero hype about it. There's no mainstream admission of gold as being part of a portfolio, and I find that to be a very bullish indicator, very interesting, and that kind of goes part and parcel with what I've said to you over the last several weeks about availability and premium. It will go down as a mystery to me. I'm worried about the world she's growing up in, and yet more so than ever, and yet with gold at all-time highs, with massive craziness all around us here at home, and unwinding of dollar supremacy little by little outside the country. They call it de-dollarization. Gold has gone unnoticed as it's reaching all-time highs. So it is a mystery to me how the investing public completely ignores what's happening. And maybe to Al Gore's point that guys like you, the alternative media, are a threat to democracy because, the mainstream is not seeing all the same news. Well, the people who listen to you and others like you and me, I think, are prepared for what's coming. They don't look at this drop in gold and silver as anything more than just the volatility we've all come to expect, but what it really does is it keeps the mainstream out of it. And therefore you have low premiums, you have great availability, and here you have gold at all-time highs on the LBMA and on GLD going completely unnoticed. I believe 2024, there will be an inflection point where gold and silver become mainstream. I don't know what that is, but I have a very hard time believing there won't be a black swan event. I really, truly do. When you see this bullshit with the 14th Amendment trying to kick Trump off the ballot, it's I don't care what side of the aisle you're on. I don't care if you are a diehard Democrat. You should be horrified by what you see. The last time we saw this shit was in, Abraham Lincoln and preceded a civil war. You could argue we're in the midst of a civil war, just not pointing guns at one another or muskets at one another right now because red and blue hate each other. And, it's bothersome. But going back to your question on gold and silver, I also find it interesting that on 12/27, a couple days before New Year's, the closing price of silver on the Shanghai Gold Exchange was $26.50, and it closed on the CME at $24.31. They're slowly turning up that's 10% higher in Shanghai to purchase gold than it is in London or in New York. And what does that say to you? Gold's been as much as 120, 30 bucks an ounce higher in Shanghai as it has been on the COMEX and London Metals Exchange for a good portion of last year. What does that tell you? It tells me that the paper price that is controlling the market is beginning to little by little lose its credibility, and the real price is beginning to transition to a market where gold and silver are valued appropriately and more on a real-time basis. And the reason that these countries that are so hell-bent on accumulating tangibles, like Zoltan Pozsar says, commodities, which will dominate the new system, Bretton Woods 3, as he calls it, is because they're accumulating it. Why bitch when they can use the suppression against us and accumulate and stand for delivery? And that's exactly what we see happening. And when you see a situation where open interest on silver is 1,506% of the registered silver, meaning out of every 15 people, one would get their bars, 14 would be cash settled, but the market would break long before that force majeure, the admission that the market is rehypothecated. At some point, the whole Western system for price setting on commodities is exposed as a sham. And I think that's what little by little we're seeing with the Shanghai Exchange repricing. So look, yes, I would be lying if I said it doesn't bum me out to wake up to see this stupidity and more of the same, wishing that at some point it would end. But I do think the only way that you can suppress a market or manipulate a market rather over an extended period of time is to push it in the direction that it is going.
As we conclude this economic exploration into the world of gold and silver with Andy Schectman from Miles Franklin, remember that staying informed is pivotal. Keep abreast of economic dynamics for sound investment strategies. Stay connected with us for more insightful discussions that empower your understanding of the ever-evolving economic landscape. If you enjoyed today's video, please like, share, and hit the super bell icon to stay updated. Thanks.